Good morning. It's August 13th, the Monday morning, and markets are retreating a little bit here today. Again, after the USDA report was solidly bullish on Friday, we've seen the markets rally sharply, and then as the day progressed, the markets set back. Many are talking about a key reversal in the corn market, a blow-off top possible on the charts where we had the sharp move higher and then a weaker close. The only thing that keeps us from believing in a normal reversal pattern here is that we did see open interest increase on Friday by almost 27,000 contracts. So not all of the factors that we normally look at in a technical reversal are in place, but certainly seeing some more follow through to the downside here, some profit taking, as I would say here this morning. The lower yields that the USDA put out on Friday was certainly believable. They were in line. We take our hats off to the USDA for that, and that they were willing to lower those yields in line where a lot of the trade believe they are currently. It's likely that they will continue to lower yields, maybe a little more as we over the next few months. And then we did have Pharma come out over the weekend and say that they still believe that the end number on yield will probably still be at the 130 level. So traders and analysts still have their own opinions of where this market should go and what kind of yield is out there. But the biggest question that we've got is, what about the price? And has price curtailed demand enough to balance this decrease in supply? So that we're not going to know the answer to that for several months, but it certainly will be talked about, and will have influences to the prices here on the Chicago Board of Trade for several months. Other news, the ethanol mandate continued to be talked about of reducing the mandate or taking it out completely. Comments from people in the know over the weekend feel like that is probably unlikely, that we will not see any change in the mandate, and we'll leave it up to price as far as slowing down the demand and the ethanol usage of corn. We've also got crop tours starting this week that will provide some headlines throughout the week as they move from east to west, and that should create some underlying support here as well. Weather forecast, however, is a bit cooler than what we left on Friday. That will certainly help the maturity of this crop some, but corn in most areas are is pretty much dried and ready to be harvested. We're starting to hear some harvest yields coming in anywhere from 20 to 50 bushel an acre in southern Illinois. So we look for technical support underneath this market in the corn. The key number that we're looking at today is the 20-day moving average in Deese contract, which is 796.5, I believe, here this morning. The $16 area in November beans is going to be critical support there. So those are numbers that are going to be watched as we start out the week. We got crop conditions report out this afternoon. Expect that corn conditions probably a little bit lower, and the soybean conditions could actually be steady or show an increase just because of the rains that we've seen here over the last week and throughout the Midwest. It could help the soybeans a little bit. The livestock trade, we should see markets open a little higher there at 905. Cutout values for beef were up sharply on Friday. Choice was up 243, Select up 102. Certainly a positive there, and should provide some support and some enthusiasm for the longs here in the cattle complex. Pork, however, down 11 cents, and continue to battle there with the oversupply of pork, high feed costs, and negative margins that we see in for the pork producers. Likely we're going to see some further herd reduction and hogs go in the market a little quicker here over the next several months as this corn price and tightness of supply continues to filter into the feeding cycle of the hog complex. Also, we have President Obama in Des Moines, Iowa today is expected to announce some type of a support program, a buying program by the USDA for pork, lamb, chicken, and catfish. So that could have a positive impact on the pork side of the equation here today as well. We're looking for livestock to open steady to better here this morning. The dollar outside markets are suggesting we could get a little tailwind from that. So a lot of reasons to stay in touch with Allendale and our staff here. We'd love to answer any questions you might have. If you're not a subscriber to the Allendale Advisory Report, we ask you to do so. You can subscribe right online or just give us a call here at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.